Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from ChartsandMarkets.com tells us the U.S. markets have regained half of what they lost since the highs of October. Sprott USA Holdings President Reaugh talks about gold, silver, and his favorite countries for resource development. He is also not fond of the current VC regime. WolfStreet.com publisher Richter looks at the global slowdown in the automotive sector and what's happening with the U.S. dollar. Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Aben Resources CEO Jim Pettit. We'll talk to Ross Clark right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from ChartsandMarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Always good to be with you, Jim.
Ross, did the American stock markets pick up over the past week?
It's a continuation of this advance from the December bottom, and 3% on the Dow for the week, 3% on the S&P. Now, these markets have recovered over 50% of their losses that they had from the October-November highs, and the pace of the advance here is really it's important. Typically, coming off a bad break in a bull market, you will just work your way steadily higher. You might retest the lows and then slowly walk your way up. The thing we have to be concerned about here is that the steepness, the momentum in this move off the bottom is more typical of what you see in bear market rallies in the early stages after you've rolled over from a top. Like recovery into April of 2008 or in May of 2000, 1973, October. These are all sharp rallies after breaks through support levels. So we're getting some really good overbought readings, as you would expect when you have a pace off the bottom like this. And whether it's the broad indices like the S&P or the Dow, or whether you get into items such as the broker-dealers index, we're at some extremes in, even down to the hourly charts as of Friday, starting to see excesses in what I call an exhaustion signal at the top end. So the probability here of it losing some momentum and starting to roll over in the next week or two, I think is pretty good. This was a week where the news was better. The talks with China looks as though they may be progressing. The Chinese are talking about maybe a 6-year deal on as far as agriculture and $1 trillion worth. North Koreans are talking. So, instead of having all the bad news out there, we're getting to the point where you might be concerned here that if the good news actually comes out, this will be a sell the news type of trade. So, been a great rally off the bottom. I would suggest that people turn fairly cautious in here right now.
Yes, and the big question always is, do we have enough of a correction to make the markets bounce up higher and not drop down again, or is this going to suck people in and then there's going to be a giant downward swing?
Yeah, well, that's the question that we've yet to be able to tell. And I guess, sentiment numbers have been extremely negative at the bottom. They haven't really come back all that positively right now. So I think, if we ease back down to retest support, it will be how it performs on the subsequent decline here, subsequent correction that we have. And if all you do is give back maybe 30 or 40% of the rally we've had off the bottom and then start to turn and make a higher high, it'll be proving that the uptrend from 2009 is still in place. But if this thing really does start to roll and have some difficulty on rallies, then we've got to be extremely cautious. So, what we'll look for are overbought signals in downtrends if things do continue that way. Otherwise, patience here. Just let this market resolve itself, show us what it wants to do.
What does the U.S. dollar appear to be doing?
Well, the dollar index had a great pullback to its 50-week moving average here. Now, you got to remember, it bottomed out well over a year, actually almost 2 years ago now, and progressed well into the summer. And the correction came right down, say, to the 50-week average, or 200 days, if you want to think of it that way. We got some nice oversold signals in January, and the rally's looking pretty good. And so I think you've got some upside possibilities still here for the U.S. dollar. It's got to get through the 96 and change level where it is right now. But trend is up there with support just around those January lows. The reciprocal to that is that the precious metals, in particular gold, at the early part of January had 3 days of upside exhaustion. And typically it will top out within 2 or 3 days of that type of signal, and it did just when we got to around 1300. You look for a pause after that, and that pause will generally take up to 3 or 4 weeks. At this point, it's had trouble getting through the high 1290s. We closed off the week pretty poorly at the 1281 to 1282, which is a short-term support. It will be very important in my work that it hold in here, or you're looking for something in the mid-1250s. So the seasonal play did run its course into early January. The question of whether we have a second leg up is going to be dependent upon how well this holds right at this 1280-ish range that we ended up on Friday.
Any thoughts on crude?
Crude, stronger than I thought it would be. I definitely, we got the bottom of the move. Did not anticipate that we'd be trading up here to 53 and change so quickly. But it's all part of that big 10-year cycle low coming into play. Would prefer now to still be patient and wait for some kind of a pullback, whether that's into the mid-40s or not is questionable. But I wouldn't be chasing it at this point. We take a look at other items that would move with the oil market. The Canadian dollar. You've seen the discount on the Canadian oil price, the Western Canadian Select, sitting at about $11 right now relative to the U.S., which is a far cry from what it was at the depths of the market. So you've got the benefit of the oil market. You've had agricultural prices stabilizing and starting to work their way higher. But the Canadian dollar this week didn't manage to do anything. And that is the sort of the first canary in the coal mine as far as I'm concerned. The dollar peaked out about 10 days ago, and with the divergence starting to set up relative to oil and other commodities, this is cause for concern on the Canadian dollar. Maybe by the end of next week we'll have a better idea just whether it is finally ready to roll over here. But it's recovered about half the losses from the September high. Would be a normal place for it to find resistance and start its next leg down. And if oil or the other commodities start to run into some trouble, I think the Canadian dollar definitely does.
Ross, thank you so much for chatting with us.
Pleasure to be with you, Jim.
My guest has been Ross Clark from ChartsandMarkets.com. Coming up, Rick Reaugh next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm speaking with Rick Reaugh, President and CEO of Sprott USA Holdings. He's speaking to us from Carlsbad, California. Rick, welcome back to This Week in Money.
Always a pleasure.
Rick, how's the Sprott Symposium in Vancouver shaping up for this year?
Well, we, of course, think this year will be better than last year, which was better than the year before. We have a great range of speakers. We have the same high-quality exhibitors we've always had. As you know, which you've appreciated before on the air, in order to be an exhibitor, an issuer exhibitor at the Sprott Symposium, you have to be owned in Sprott performance fee-generating accounts. It doesn't mean that every exhibitor we have has a share price that's going to go up, but it means that we know them well enough that we own them with our own money. And we think that's one of the reasons why year in, year out, through good markets and bad markets, our symposium always provides great value to attendees and exhibitors alike.
And just to keep you up in the loop, the Sprott Symposium is July 30th through August 2nd at the Fairmont Hotel, Vancouver.
I think it's our 25th year there, if my memory serves me correctly.
Rick, U.S. markets have just gone through a 20% correction. What do you see ahead? Has it been enough?
I have no crystal ball. My nervousness is that we've been in a 9-year economic recovery and a 9-year bull market. And although I'm not an economist or a market forecaster, my concern is that after 9 years, the market is relatively long of tooth. It wouldn't surprise me to see the market come down some more. Although, I'm not the sort of traditional gloom and doomer that you might see in the gold space. I will tell you that if interest rates continue higher, it probably weighs on equity prices to the downside.
Do you think they're going to keep increasing interest rates, or are they going to maybe do it one or more times and then hold?
I think they'd like to increase interest rates, or at least I think they would like to manipulate interest rate markets less aggressively than they have in the past. To the extent that the Fed reduces its balance sheet and isn't, necessarily a buyer of bonds, you might see interest rates increase of their own volition.
Is the growing geopolitical uncertainty good for the commodity market?
It is not. I believe geopolitical uncertainty, when it's of the nationalist, protectionist kind, is very bad. Free trade and free exchange of goods and services between people makes everyone richer. Economic restriction, economic nationalism, terrorism, all of those things, protectionism, make people poorer and reduce demands for goods and reduce demands for commodities. So no, the geopolitical uncertainty, at least geopolitical uncertainty of the type that we're seeing, the nationalistic, jingoistic, protectionist sort of trend that we're seeing on a global basis, is bad for the economy and bad for commodities markets.
Is the U.S. dollar still a key player in any substantial gold and silver play?
I think the global faith in the purchasing power of the U.S. dollar, expressed in particular by the U.S. 10-year Treasury, is the most important determinant in the gold price. For the last sort of 20 years, the risk-off asset has been the U.S. 10-year Treasury, where going back decades before that, the risk-off trade would have been gold. So to the extent that you see continued U.S. dollar strength, you may see continued gold weakness. As you know from prior calls, my suspicion is that although gold won't win the war against the U.S. dollar, it will lose the war less badly, which would be very good for the gold price.
Is the commitment of traders turning bullish for gold and silver?
I don't know the answer to that, to be honest with you. I think the overall outlook is becoming bullish for gold players, but I think the commitment of traders probably focuses too narrowly on the buyers and sellers that predominated in the market 20 years ago and don't take into account enough the new realities of the gold market.
Are you investing in gold and silver juniors for this year?
I am. I'm in the process this week and next week of making about a U.S. $1 million allocation in my own account. I may be early, but the truth is that there are several themes which I find extremely attractive. And during the January doldrums, where most people are on vacation, I'd like to allocate capital so that I can have my positions in place before they come back to work.
How is this acquisition or merger between Newmont and Goldcorp going to affect the junior market?
I think both of these acquisitions, go back and do the Randgold Barrick merger and the Goldcorp Newmont acquisition. I think these are fantastic for the mining industry for a bunch of reasons. Larger companies enjoy more trading liquidity, higher share prices, and hence a lower cost of capital. And in a capital-intensive business, you need that. Another thing that happens, and this is at least equally important, the mining industry suffers from too much general and administrative expense relative to assets under management and relative to EBIT. Mergers give you the opportunity to thank and excuse redundant managers and lower the general and administrative costs, which is great. That whole aspect of rationalizing these big companies, where they sell the smaller, more speculative, more redundant assets, does two things. It lowers the acquisition cost and again lowers the cost of capital in the merged company. But more importantly, it puts assets into the market that weren't being adequately exploited by the people who owned them. I think this will put in place a tremendous opportunity to grow mid-tier and junior producers by using assets that, while they were crumbs to Newmont, would be banquets to juniors. And finally, we believe that a lot of people will be made redundant by these mergers. And while it will be uncomfortable for the people temporarily that'll be made redundant, we think that many of these people will be put to better use by subsequent employers. I remember years ago when the Barrick Placer Dome merger took place, and much of the Placer Dome exploration staff was made redundant. There was an immediate uptick in the quality of geological talent that was available to Vancouver juniors. And frankly, Sprott benefited by hiring both Andy Jackson and Dr. Neil Adshed, who contributed mightily to the wealth of Sprott clients and Sprott itself. So we see these mergers as being attractive to the industry in many, many regards.
We'll have more with Rick Reaugh when This Week in Money returns.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Rick Reaugh. Rick, with electric vehicle production expected to continue to grow, are you investing in battery metal companies?
If you include copper and nickel as battery metal companies, the answer is yes. We have not been in the lithium play for quite some time. We felt that got overheated. We think it continues to be overheated, although the prices come off. We would note with regards to lithium that what we have is a shortage of processing capacity, not a shortage of the material itself. We are attracted to the cobalt space, but I have to say it's challenging to find a cobalt asset that you can buy with a straight face that isn't in the Democratic Republic of Congo, which has its own challenges. Certainly there are cobalt assets in Russia which are attractive too, and we're Norilsk shareholders, but that requires a certain appetite for political risk and some would say financial opacity that might not be shared by other speculators.
When you invest in various markets or stocks, are you concerned about possible manipulation?
Certainly. We believe that manipulation occurs in all markets, including commodities and, of course, equities markets. The truth is, at Sprott, we aren't really speculators so much. So to the extent that, as an example, a program trader or some other trader front runs us for 2 or 3 cents on a $2 stock, we're somewhat less concerned about that. There are risks which we consider to be greater risks, so we're willing to tolerate that.
Stock promotion is necessary to introduce potential investors to companies. What kind of promotion works and what doesn't?
Well, I think the thing that works the best is communicating with your shareholders as though they were your partners, they were your owners. If you examine the letters to shareholders, the quarterly letters to shareholders that have been issued over time by the greats, the Bob Quartermains, the Ross Beatties, they have really laid out very clearly for investors what the company was trying to achieve and how the company achieved it. So I would say very, very clear communication. I'm not saying not to be optimistic, but I'm saying in the context of optimistic to be realistic too, to convey to shareholders how you intend to deliver value, be very honest about your failings, and also point out your successes. I would say hardcore communication with loyal shareholders is the most important thing.
The biggest percentage stock win you ever had, was it a short-term or a long-term hold?
Very low. Well, I guess it depends on your point of view. That would be Paladin. And if my memory serves me well, that was a 4 or 5 year hold. And I have to say it was punctuated by enormous volatility. If I recall, my initial entry point was at 10 cents. The stock went all the way down to a penny. Mercifully, I bought more as opposed to sold. The stock went from a penny to $10 over 4 or 5 years, at least 3 times. In that ensuing period, the stock fell by half. So it did its very best to shake me out many times.
Which countries are currently the best for resource exploration and which ones are the worst?
Best is an illusory term. I would say in terms of a conjunction of social willingness to accept mining and geological prospectivity, my favorite country in the world would be Chile. I like Australia still a lot, a mining culture and a lot of unexplored strata. Because I'm more willing to take political risk than technical risk, I'm attracted to exploring the Tethyan metallogenic belt, which really runs from Turkey all the way through Mongolia, through a whole bunch of countries that scare the hell out of other people. I also like certain parts of Canada, which I believe to be mining friendly. Saskatchewan, which is an extremely mining friendly jurisdiction. Some parts of Ontario, now that the rapprochement between rural Caucasians and rural Aboriginal people, First Nations, is beginning to be solved. Some of the Maritimes. I'm frankly very disturbed with the social and political trends in British Columbia. So although I'm attracted to British Columbia for the array of technical talent present in Vancouver, and while I like the geological prospectivity of Northwest BC, I'm being much less aggressive as a deployer of capital in British Columbia as a consequence of acts of the provincial legislature, and unfortunately how popular they seem to be with the electorate.
Is a low oil price good for miners?
Yes. Yeah, absolutely. Low energy prices, given the expense of the input, very good for the miners.
How are financings going for the junior space?
I think if you ask the issuers, it's a very hard market. We at Sprott have been active for the last 2 years in market declines, providing both debt and equity to the mining community. And I would say that money is still available to deserving people with deserving projects, provided it's priced intelligently. When people say there's no money available for mining, and you look at the spectacular job that Cobalt 27 has done in the last 2.5 years, raising almost $900 million in a market where people said that capital wasn't available, it sort of speaks to capital availability. It's also worth noting that in Australia, where the mid-tier gold producers have done a spectacular job of implementation, aided, of course, by a weak Australian dollar, the capital is freely available to the mining sector as a consequence of their financial performance. Some of the alleged scarcity of capital available to Canadian issuers has to do with the financial underperformance of the industry for the last 10 years.
We'll have more with Rick Reaugh when This Week in Money comes back.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Rick Reaugh. Rick, is uranium turning bullish?
Slowly. The answer to that is yes. The supply cuts that we're seeing as a consequence of the reduction of sustaining capital investments, and in some cases the deliberate shut-ins, are beginning to have some near-term impact. In addition, we're coming into a repricing and refueling cycle, which I think will be bullish for uranium prices. I continue to believe that in the near term, the price of uranium is going to be determined by the pace of Japanese restarts, which has been fairly slow. Longer term, I take a lot of comfort as a uranium owner in the pace of nuclear plant rebuilds, new builds, particularly in China. So I feel long-term, like 3, 4, 5 years, extremely optimistic about the uranium space. In the near term, I think patience is going to be required.
Why is thorium being ignored as a safe alternative to uranium?
You are above my technical pay grade in that question. People ask me questions about thorium a lot, and all I do is defer by saying that billions and billions and billions of dollars are being spent on uranium reactors, and very little money is being spent on thorium. So I can either decide that the industry is making an absolutely catastrophic mistake with regards to capital deployment, or else people with more technical capability than I have decided that it's more economic to build uranium than thorium plants.
Is China likely to play a big role in resource markets going forward?
I think it is. I think the growth of the Chinese economy will begin to slow, but understand that it's slowing from a very large relative to a small base. I read the other day, I don't know how accurate this is, but I read the other day that urbanization still has 200 million Chinese to impact. You know, the electrification and delivery of basic services to western and rural China is something that will continue to demand resources. In addition to that, as people in China become richer, the poor people in China, what's interesting is that when poor people get more money, their spending habits are very resource-centric. When you and I get more money, we buy services or we buy some little gadget from Apple that doesn't really require any metals at all to make. But when poor people get richer, they replace thatch roof with steel roof. They replace mud walls with cement. They upgrade from a bicycle to a motorcycle to a Toyota Hilux. So the increase in living standards and the increase in domestic consumption in China, I think, will continue to be an important story in resources.
Is China still a good place to do business?
China has been a very good place for Sprott. I don't want to talk about all business people. It took us 5 years to come to understand the needs of our Chinese clients, and it took 5 years for our Chinese clients to understand how we delivered services. But the point has come now where we know and trust and interact with each other very well. So I don't want to speak to organizations that aren't prepared to develop and devote 5 years to getting to know how to do business in China. Having done that, I'm very attracted to our Chinese clients, both in a business sense and personally.
Can you see a quick end to this trade war between the U.S. and China?
Unfortunately, I can't. And I think you could continue the discussion to Brexit, to the European community. I mean, unfortunately, this sort of jingoist, protectionist nationalism is something that's popular around the world. I think a local manifestation of it for you in Vancouver would be the racist, protectionist actions of Vancouver City Council and the BC provincial legislature with regards to rapacious tax on non-resident owners of real estate. It's a different form of protection, but it is of the same sort of nationalist, protectionist, jingoistic ilk that the trade war between some elements of the United States and some elements of China exhibit.
Do policies like that hurt or harm or promote economies?
Well, of course they detract from economies. The best economies are the freest and most open, the most welcoming. Pick any jurisdiction. The people who pay a tariff are the consumers in the economy that are allegedly protecting their own producers.
Do you think that gets lost when tariffs are slapped on? It's not the country you're putting the tariffs on that pays, it's your own citizens.
Of course. What happens is that you're benefiting a very narrow class that's very noisy. And you are putting an incremental tax on a much larger but much more diffuse constituency. So the consequence of that is that a few people are ecstatically happy, make a lot of noise, and give you campaign contributions. It's the way democracy works. I think it was Mencken who described elections as advanced auctions of stolen property. So very often that small group, which are aided by protectionary tariffs, are the high bidders by way of campaign contributions or other sorts of emolument in the political process.
What's better for the price of commodities, nationalism or globalism?
Oh, globalism, by far. By far. Nationalism makes everyone poorer.
Is the new governor of California going to bring prosperity to the people of California?
He won't be as colorful as Moonbeam was. I suspect that his policies will be the same. It's amazing to live in a jurisdiction that generates as much wealth so that it can afford as much stupidity as California. It would seem that despite the fact that I live in a jurisdiction where 5 college kids can commandeer a garage and out pops Google, it's amazing that the people who run the state believe that you can add a column of negative numbers and end up with a positive sum. Mr. Newsom he's a little like Trudeau, in fact. Good looking, extraordinary with regards to narrative. Very dramatic, but it seems as though he or they have never mastered third-grade math.
How can people find out more about Sprott and the Sprott Symposium in Vancouver?
I would love it if people would visit www.sprottglobal.com, SPROTTGLOBAL.com. Come to our website. Failing that, email me directly, rrule, that's RRULE, at sprottglobal.com, and I'll give you more information on all of the above.
Rick, thank you so much for being on This Week in Money.
Always a pleasure. Thank you.
My guest has been Rick Reaugh, President and CEO of Sprott USA Holdings. He was speaking to us from Carlsbad, California. Coming up, Wolf Richter next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled CAD discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Wolf Richter, publisher of wolfstreet.com. He's speaking to us from San Francisco. Welcome back to the show, Wolf.
Thanks, Jim, for having me back.
Wolf, what's going on with car sales in China?
Yeah, this is a very interesting story. China has had a boom in auto sales like we've never seen before. China, of course, a few years ago became the largest auto market in the world from within 15 years from just a backwater. You know, they were absolutely just a backwater in the early 1990s. And over this period from 1990 on, as far as we have that data, they have never had a year where car sales passenger vehicle sales actually declined from the prior year. And year after year, they had massive sales gains. Even during the financial crisis, the government pumped the auto market, and over the 2 years, during the financial crisis, car sales actually doubled in China, whereas they plunged by 35% in the United States. Yeah, so now comes 2018, and 2018 was the first year in modern China when car sales declined. And they declined by 4% from 2017. But what really happened was that over the first 6 months of the year, sales were up. They were pretty good. And then they started heading down. In July, they were down about 4%, and in August, they were down 4%. And at that time, the peer-to-peer lending had collapsed in China. That was another one of those crazes that China goes through occasionally. And there were, over the past 2 years, several thousand of these peer-to-peer lenders had sprung up, and they were taking investor money and they were lending it out to essentially subprime customers who could not get funding from banks, for their purchases. And some of this money was used to buy cars. So, and then that's the equivalent to a subprime. They just think of it in those terms. But it was peer-to-peer, so it was private lenders. The government finally stepped in and shut down 1,000 or so of these operations. So lots of investors lost money, and and the lending just stopped. So this was in July and August when that hit car sales, and we thought, okay, so that was it. Then in September, sales dropped by 12%, and in October, it dropped by about 12%, in November by 14%, and in December by 13%. Now, these are year-over-year sales declines, and they're just massive. So double-digit declines, 4 months in a row, year-over-year, something that China just hasn't seen. I mean, occasionally they have a big plunge in sales when the Lunar New Year falls in a particular month and compared to different than a prior year. And so that can cause some big issues. But then the next month you have a surge in sales and it balances out. But these are the last 6 months of the year, and the last 4 of them were double-digit declines. And in China, auto sales hit almost 25 million vehicles in the peak year of 2017. Now they're down to 23.7 million. By comparison, in the United States, our market here is 17 million. So this is how much larger the Chinese market is. And back in 2013, it became the world's largest market, and they just haven't stopped growing. So this is a massive problem for global automakers. And these are the biggest automakers in China are Volkswagen Group and General Motors. And then there's a whole bunch of Chinese companies. And of course, global companies have to work with the joint ventures in China. So this is not, these are not entities that they own 100%, but these are joint ventures they own with Chinese entities. And a lot of these Chinese entities have then their own companies that produce cars out the back door, so to speak, and compete with the global automakers. So this is a real problem because growth has been the rule in China, and in order for manufacturers to grow, they have to build capacity, and capacity can't be built just from overnight. You just have to be planned. You're buying property, you're building manufacturing plants, and this is not only the assembly plants, but also the component industry. And suddenly this flood of new capacity that has been coming online, and that will continue to come online as the next year or two go on, is faced with this drop in demand. And so you have what the industry fears the most, which is overcapacity. When overcapacity exists, automakers tend to just try to keep the plants busy, and so they're starting to cut prices to keep the plants busy. And that is what finally toppled GM and Chrysler, and almost toppled Ford during the financial crisis. They had this huge amount of capacity, sales were dropping, and overcapacity had been a problem for years going into the financial crisis. And then when the financial crisis hit, it was just too much, too late. And so and this is a problem, of course, that China is inexperienced in. They've never had a sales decline. They don't really know what that will do, and everybody's hoping it would be over, and these big growth years will come back. But there's a point of saturation. It's very difficult to park vehicles in China. The expressways are incredibly crowded and congested. City traffic is incredibly congested. There are limits to how many vehicles you can sell in China, because what are you going to do with them? You turn the entire country into a parking lot. Yeah, there's 1.3 million consumers in China, but you can't assume that 1.3 billion consumers, and you can't assume that each one of them is going to have a car. There's no place to put them. There's no place to drive them. Mass transit systems in China are very good and very modern, and people don't really need to have a car like they need to have a car in North America in many cities. And so there's a point of saturation, and I think that's what we're looking at here. So we've got surging capacity, and I think we've got a saturation point where it just won't grow much more. Now, the United States is selling 17 million units a year now, about, and that is flat with 10 years ago. So we had this big trough in the middle, and during the financial crisis, but there really hasn't been any growth in the auto industry in the United States in over a decade.
Well, perhaps we'll talk about the situation with the Canadian and U.S. auto markets when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Wolf Richter. Wolf, with a decline in auto sales in China, what's the situation in Canada and the U.S.?
Well, so in Canada, to start with here, had a down year in 2018, and that's that's the first down year in quite a while, and it started out pretty good actually. January and February were strong, and March was down just a little bit compared to a year earlier, and then it hobbled along with negative numbers all year long, and then towards the end, the bottom fell out. So you had 9% and 8% declines in November and December, a 7% year-over-year decline in September, and that created for the year total a decline of 2.8%. And the deterioration at the end of the year is really concerning there, because December tends to be a pretty strong month, but it just wasn't in this year. And that's when when all automakers are pulling out all stops to trying to make the year as good as possible, and it just didn't happen. And in the United States, we had a similar thing happening, and even though overall sales were up just a little bit from 2017, but 2017 had been a really bad year, and so in 2018 in the United States, total auto sales at 17.3 million were actually below the level of 2015. So it's up a little bit from 2017, but down from 2016, which had been the peak year, and down from 2015. And so these declines are fairly slight overall. But when you look at the American automakers, so you look at GM, for example, that's the fourth year in a row of declines for GM. And it's the fourth year in a row of declines for Ford. And it's the fourth year of a row in declines for Toyota. Now, Fiat Chrysler had a terrible year in 2017. I mean, sales just really plunged. And so in 2018, they recovered from that, but their sales too were down from 2015. So, overall the market peaked in 2016, but for the American automakers, it peaked in 2015. And we had some Japanese automakers that did pretty well, and meaning Japanese brands. A lot of them are manufactured in the United States. Honda built much of its vehicles in the United States. Toyota has some big plants too. So we're talking about brands here. The German automakers, they eked out of those gains, saw a record in sales in the United States, and they too are manufacturing a lot of vehicles in the U.S. BMW's largest plant in the world is in the United States, and it exports actually some vehicles from that plant to other countries. And then Subaru was really strong, and the Korean automakers in the United States have so that's Kia and Hyundai. They have gotten crushed in 2017 and fell off again a little bit in 2018. They're trying to go upscale. And so they're selling $30,000, $40,000, $50,000 vehicles. And everybody's trying to go upscale in the United States. And they're trying to sell cars, when car sales are way down. Pickup trucks and SUVs are doing really well, but not car sales. So they have run into this buzzsaw of the market changing. And car sales overall are now down to only 29% of total sales in the United States. When you think about this, they used to be over 50%. Now they have just over the last 4 years have just plunged, and the Koreans have gotten caught up in that. and also that move of upscale them. Who wants to pay $40,000-$50,000 for a Kia, and that's a problem they have. There's a lot of demand for low price vehicles out there, but the new vehicle manufacturers are not offering them anymore. They used to be there, Kia and Hyundai used to offer those, but they no longer do. So that demand for lower priced cars has shifted from new vehicles to used vehicles. And that's an amazing thing. When you look at this, over the past 4 years, truck sales have been strong, but new car sales have just been terrible. And they've declined every year by the double digits. And you look on the used car side, and the market for these cars, the bread and butter cars, the lower price, smaller cars, is hot. And the used car market in the United States is 40 million units a year. So it's much larger than the new vehicle market. And these used vehicles are holding their price. There's a lot of demand for them when they go through the auction. Dealers are buying them. These cars go into the used vehicle market via fleets, so via rental cars and via corporate fleets, some government fleets, but also via repossessions and others where they're sold at auction to dealers that then retail them. And that market is super healthy. It's very strong. It's hot, and that's where the demand is for these cars. And it's a $10,000, $15,000 vehicle that every American wants to buy. And when he goes to a new car dealership, you're confronted at the low end with a $25,000 vehicle. So, that's a real problem in the market. Everyone would upscale in the United States and in Canada too, and it's really pushing out a whole group of buyers at the low end. The $70,000 pickup trucks, that are selling really well, and SUVs. And so there is a level of, a portion of the population that likes to spend lots of money on vehicles, but, and so automakers love those. If they make $25,000, margin on one of those $70,000 pickups, there's a huge profit center for these automakers. And they make almost nothing on small cars. So they've backed away from that. There's closed plants in the United States and in Canada. The car plants are being shuttered left and right by all three major automakers, American brands. And that's the shift we're now having. So, where there's a certain part of the population that wants a lower priced vehicle and they can't find it in the new car market anymore and they're going used. And then there's a certain part of the population that buys expensive SUVs and trucks. And then now we have the crossovers, which is the new segment that's really essentially a car. It's based on the chassis of a car, has a car powertrain, but it looks a little bit like an SUV, so it's a compact SUV. It's really a car, but they're considered trucks, and they're hot too. So they're selling really well. They're kind of the modern station wagon, really. That's what they are. But they do really well. So, given that we have it's a collapse in car sales, and we have a boom in truck and SUV sales, and the overall sales peaked in the United States in 2016, and they peaked in Canada last year in 2017, and now in Canada, they're falling off too, so, that market is now saturated, and we're running into a big problem where a large number of people who would be new vehicle buyers can no longer afford them because new vehicle manufacturers have gone upscale and they're no longer building and pricing vehicles in the $15,000 to $20,000 range. So that market is there, but there's no supply in that market. So that I think will hurt volume. Now, automakers will continue to press forward with the high dollar units, and Wall Street loves that. You see every time Ford and GM talk that they're talking about the shift to higher dollar units, higher profit margin units, and that they're doing this purposefully because they can make $25,000 on the pickup, and they can make almost nothing on a car. So it's logical, but they're excluding part of the market, and that will come to haunt them. For mass market manufacturers, that is a strategy that eventually will fail. And some of the consequences, we now see. The numbers, the dollars are still there, but the volume is now dropping off quite a bit at GM and Ford. The share prices are way down and especially at Ford. Ford is getting crushed. And that strategy of just going upscale when you're a Ford Motor Company, is it's a little ironic, and I think they're starting to pay the price for that.
Who's going to fill that gap? Who will supply the lower priced cars that people will demand?
Yeah, so right now that's the used car market. So that's the rental car companies that are still buying those cars and that then put them out on the used vehicle market. And rental car markets will continue to buy the cars because, the demand is strong for them when they sell them. So that's good. That's what they need. They need a strong demand for these used cars when they go out at the tail end. And that's what they need. So they will continue to buy that, and there's not enough supply for these cars, so the prices are high on the used vehicle side for those vehicles. But there's still, someday a Chinese manufacturer may set up shop in the United States and sell a $15,000 new vehicle just like the Koreans did in the 1980s and take the market by storm. It could be that market will be taken by some company that's never done business in the United States and that suddenly has a $15,000 or $20,000 adequate vehicle that's not perfect, it's not luxurious, it doesn't have all the bells and whistles, but it's adequate and it's of good quality and it does what people need it to do, and and it's much lower price point than what American manufacturers can offer. And they can take a market by storm if somebody figures that out. And that's happened before. The Koreans did that, and the Koreans did it with really lousy quality at first. Now the quality is good, but back then in the 80s, those things were terrible. And they put 10-year warranties on it, to be able to sell them because nobody wanted to buy these things. And over time, they have gotten to be good vehicles, but very expensive. And that's a market opening that exists and that somebody may take advantage of.
We'll have more with Wolf Richter when This Week in Money returns.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with Wolf Richter. Wolf, is the U.S. dollar's status as the dominant global reserve currency being threatened?
That is a theme that we hear a lot. And the main impetus for this is the Chinese renminbi that is now included as a reserve currency in the IMF basket. And it was assumed that the renminbi would surge as a foreign exchange reserve currency. And that happened, that started in 2016. And so there are a lot of people that think that the dollar has seen its best days and that it needs to go and that the hegemony of the dollar is just too much. And some of them predict the death of the dollar and these kinds of things. And so what we see is that the dominant reserve currency is still the dollar with about 62% share. And then there's about 38% share with other currencies. And that has been amazingly stable within a range, So in 91, the dollar was down to 46%. In 2000, it was over 70%. Back in the 70s, it was over 80%. But over the last 10 years, it's been, give or take, around the 65% range, sometimes a little lower. And the number 2 currency now is the euro. And before the euro came along, it was the various European currencies, particularly the Deutsche Mark, and they all were combined into the euro. So, and it was assumed by the European financial authorities that the euro would essentially reach parity with the dollar as a reserve currency. And that was starting to, the euro started to build popularity among central banks until the European debt crisis put an end to that. So it was on the way to do that, and then the debt crisis happened and everybody got second thoughts, and that stalled the euro. So the euro has been around a 20% share ever since. And it's still the second largest reserve currency, by far ahead of everything else. Now the Chinese renminbi is at 1.8% right now. So the Japanese yen is at 5%, and the UK pound is at 4.5%, and there's some other currencies, Canadian dollars around 2%, Australian dollars around 2%. And the Chinese economy, the second largest in the world, should have more of a weight in terms of the reserve currencies. But right now it's 1.8%. And that tells you that central banks around the world are really leery of that currency. They're not piling into it. And they're not dumping the dollar. At that point, they're not dumping the euro or adding to it. It's just sort of stable. And the renminbi is it's making a little headway, just tiny little steps, and not moving much. And the reserve currency for the United States is important, and it gives it a privilege. But there's this theme out there that the country of the dominant reserve currency has to have a huge trade deficit with the rest of the world in order to make that work. And that theme actually is wrong, because the euro belongs to the Eurozone, and the Eurozone has a very large trade surplus with the rest of the world. And the euro is the second largest reserve currency, and it has the Eurozone has a surplus with the rest of the world. But what it does do is it allows the United States to finance its trade deficits. And the trade deficits are big negative for the U.S. economy. And it just mathematically, if the formula, for GDP, the way it works out is, that exports add to GDP and imports subtract from GDP. And so when you run a trade deficit, you have more imports than exports, and that subtracts from GDP. And the formula, and you see it everywhere, it costs jobs. Imports are, and you're talking about, corporate America that's offshoring its supply chains and it's offshoring production, and, it's incentivized by our tax code, and it's doing all these things, and, to maximize its profits and its tax benefits. And, this costs all kinds of problems in the United States. But normally, a country would run into a wall. It would not be able to finance these trade deficits. And, with the dollar being the dominant reserve currency, we've been able to fund these deficits, and there's no wall there. We thought we were going to hit it, and these started 20 years ago. We didn't used to have this kind of problem. Then 20 years ago it started, and, corporate America started offshoring the production more and more, and importing, from other countries what they used to build in the United States. So, every year we expect, this is not going to work much longer. It's not going to work much longer. It keeps on working because the world continues to take the dollars, and it continues, to take the foreign exchange reserves denominated in dollars. And, so long as that's working, we continue to fund that. Nothing goes on forever, but right now that's the situation we have, and that's what it is, and if the current pace of change continues, it will take decades for the relationships to change in a very dramatic way. So for the dollar to drop below 40%, for example, it would take a very, very long time unless there's a cataclysmic change or really, the dollar just goes to heck. But, the way things are right now, central banks are very, gradual in their approach to these things, and they're not making big changes. They're not buying their renminbi in large quantities or renminbi-denominated assets. So that's really not happening. They're sticking to their euros and they're sticking to their Canadian dollars. There's no real change there. And the same with the US dollar. So and all this data comes from the IMF. They have, on a quarterly basis, they release this data, and I cover this on a quarterly basis because it's interesting and because I want to know, are we going to hit that wall eventually? And so far there's just no sign, on the horizon of that. It looks like, minor changes here and there, that don't amount to much. And the renminbi is going to gradually, over the next many, many years, work itself into the system of foreign exchange reserves. But it would be so slow and so gradual that, watching paint dry will be an exciting activity.
Wolf, how can people find out more about Wolf Street?
Wolfstreet.com is my website. Everything is free. And, we have a, active comment section with lots of good commenters. So check it out. Wolfstreet.com.
Wolf, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Wolf Richter, publisher of Wolfstreet.com. He was speaking to us from San Francisco. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Reaugh, Wolf Richter, and thank you for listening. If you have any questions for the show, you can email us at info@housestreet.com. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with American Manganese CEO and President Larry Reaugh. Welcome back to the show, Larry.
It's always good to be here, Jim.
Larry, some big news coming out of the U.S.
Yeah, this is on the on battery recycling, which is the DOE, and they're setting up a system there where they are having an R&D center to develop and profitably capture up to 90% of the lithium-based battery. So that's good news for us, and we're going to be attaching a copy of this to our presentation today. But what it is basically, there's $5.5 million up for grabs, and there's $15 million to be spent on this. With their various labs, and I'd like to say that, they certainly are aware of us. We went down to Iowa to the opening of the critical metals and their annual general meeting, and so they know about us, and we've had lots of contact with the DOD and the DOE regarding the lithium-ion batteries, but also we've had lots of contact regarding our process for producing manganese from low grades. And so we're definitely, in their sights. And I see this as a huge benefit. This is making news everywhere. And, I can't believe that we wouldn't be part of this, but time will tell. And I'm not sure whether a Canadian company would, be up for the prizes, but who's to know? It's all going to be strictly U.S. companies, or it's going to be international. But that said and done,
I'd like to also mention that the pilot plant arrived late yesterday afternoon at Kemetco. It was stripped down for shipping. It was too tall to get through some of the underpasses, so it's going to be reassembled probably starting Monday, if not today. And so we're moving ahead with that. I know that people have been waiting for that. We've had delays, but those are to be expected. I've never known of an operation to start up immediately and be running 100%. So I'm used to delays. My shareholders are frustrated by them. But, it's totally out of our control on some of these things that happen. And, it really depends on the market. So, what's the week hold for us? Well, certainly, I think that I've been saying this on my podcast for a couple of months now, that there's more focus coming on the recycling market. People have wondered why I've entered into NDAs, and I have with some of the largest companies, why they haven't moved on it. Well, until the pilot plant's done, it's still just a conception. And we have no doubt that the pilot plant will work. We've run it for manganese, which was a disruptive technology from the manganese business, especially for the United States. And we were very successful and actually completed a preliminary feasibility study on it. But commodities are subject to changes. The demand goes down, or somebody overproduces and the price goes down, and so we couldn't move ahead with the construction of a plant back in Artillery Peak. But, that's changing. We've certainly kept in touch with certain departments in the U.S. on our manganese process. And so we're actually should be in the crosshairs of the critical metal things that are happening in the U.S. And, I think that it's just a matter of time till somebody pulls the starter switch and, that we become recognized publicly by them. And this is an exciting time, and certainly it's not displayed in our stock. The billboards have been particularly vicious, and but you can't do your due diligence on the billboards. You want due diligence, go to our site. Everything's there. And as far as the issuing of the patent, it's just not a matter of sending $500 and filling out the forms. It's in their hands, and that's been done. And we will. We expect in a few weeks to get the patent number, and then we can start applying for patents in other jurisdictions. So this is an exciting turning point for the company. I think this release that came out yesterday with the U.S. Department of Energy, that now the focus is definitely going to be on recycling. It was only 2 or 3 months ago that people were talking about there was no profitability, and we've been showing on our site that there's a lot of value in the cathode materials, and we've been showing that our cost of reagents are not that great. So, there's a lot of money in it, and, and I imagine a lot of people will be bent over their desks working on this, but we do have protection on the patent front now, and nobody will be able to use anything that we do in any new patent application. So they certainly won't get it through. But this is, I think this year is a turning point for the company. It's been a struggle. We've had to raise every dollar. We've never gotten a grant. And but sometimes to keep the project going, grants take so long to actually get that we've moved ahead of most of that. But doesn't mean we're not still applying for grants, and we expect that there will be at least a couple that will come to fruition this year, and it's an exciting time for the shareholders. I know that looking at the price of the stock, new shareholders are getting in at on the cheap prices, and I say congratulations. You're all welcome. It's out there. It's an open market. You can buy and sell, and but I think that now that people have been patient, that those that have been patient and held their stock will be rewarded sometime this year. So, Jim, that's kind of my message today. There's going to be a press release coming out on the moving of the plants, so that's why I know this publication won't go out until after the close of the market today. But there will be a press release, and away we go.
Larry, also at the Detroit Auto Show, everything electric, Ford producing an electric pickup truck. It shows that there is a really big trend to go towards electric vehicles.
Oh, there's, tens of billions of dollars going into the batteries and electric vehicles, and that's certainly the way of the future. Zarko, our chief technical officer here at the office, he's just bought a Model 3. I've been in it and had an autonomous ride into Vancouver here a couple of weeks ago, and I got to say that if you're looking for a new car, electric's the way to go.
Larry, where are you traded, and how can people get more information about American Manganese?
You can get more information at our website, AmericanManganeseInc.com. We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. We're traded in Frankfurt under the symbol 2AM. You can phone the company here at 778-574-4444, or you can get a hold of me at LREAUGH@AMYMN.com, and we'd be happy to hear from you.
Larry, thanks for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on January 18th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of Howe Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Happy New Year, Jim.
Thank you very much. Same to you.
And what's going to be happening with Aben Resources going into the new year?
Well, the new year brings us a whole new life up there. As people should remember, we've raised a lot of money last season. We had a lot of success early on in the season. Very high grades, expanded the North Boundary Zone, and, maybe 100 meters by 100 meters, that sort of thing. There's lots of good high-grade hits there, and we went out and raised $7 million very quickly. We don't really need to do a financing this year, which puts us in a really good position. And so going forward, right now we're busy writing reports, assessment reports, et cetera, and modeling the whole program from 2018. That'll give us a pretty good indication of what to do with the area we concentrated on this year. I think probably what'll come out of it is we're going to have room to drill to depth for a lot of in that area, the North Boundary Zone. We did find some pretty good joy at the South Boundary Zone, albeit we might have been a couple of degrees off of hitting something, way more prominent than what we did. But what we do like is there was a tremendous amount of size to those holes we drilled there. There was, a lot of broad lower grade with some higher grade in it, and that to us is indicating something. So we want to get back in there. Plus, we've got a number of other projects that are being prioritized right now. So, going forward, we've got our work cut out for us. There are other areas on the property that we want to have a look at. So I think our crew this year is going to be a little larger than what we had, because we'll be doing exploratory work as well and site prep as well as drilling. We've got more drilling to do where we are. That boundary zone geochem anomaly is very large. It's 4 kilometers by 2 kilometers wide, and we've only touched a small part of it. And part of that was because we only had permits for 9 specific pad locations, and the pad locations is where you put the drill on the pad. So you're limited to where those pads are. We have now received the amended version of our pad location story, so we've got 40 new pad locations to work with. So it'll be far more adventurous this coming season, where we can actually move around the targets that we've identified from a few years ago.
And exactly where are these pads set up?
Well, the existing pads were right in the north boundary zone, with the exception of 2 that were in the south boundary. And that was based on the geochemical anomaly and some ground proofing. The north boundary was really, we rock sampling that we hit 50-gram gold samples off of. So we drilled there. That's a good start. And, and consequently, we've drilled in that immediate area 40-plus holes, I think it was 45 at the end of this season. So we've pretty much peppered that area, but then again, limited because of the pad locations in that area. They only allow us to get at certain angles, and that makes a big difference in this type of geologic environment. So there's, a few more areas there we might want to hit on, but there are lots more that we're going to move to and put pads on there, and that's in the works. The geologic team is working on, where to get the pads located, that sort of thing. But the good news is it's all permitted, and the archaeological studies have all been done.
And all this action is happening in BC's Golden Triangle?
Yes, this is all at the our Forest Curve project, which is our flagship project in the Golden Triangle. We've also got the Chico project in Saskatchewan, which I'm optimistically, or I'm waiting for a sign off from the natives, because I don't want to go through what I did last year, get there set up, and now they don't want us there. So to avoid a confrontation, I ate $200,000, and we didn't do anything. Do I want to do that again? Not without something signed by them. So that could happen. I am, cautiously optimistic, but our Justin project is looking really good. We just put a news release out yesterday, Monday, and it's basically looking like we've got a new zone of higher grade, different type of geology than the POW zone that we discovered in 2012, which is an intrusion-related gold system where you would normally find large tonnage, lower grade. But what we've got now, from what we've discovered, is something very much like the 3 Aces that Golden Predator has. And it's more of an orogenic geologic profile. Large veins, coarse gold, that sort of thing. So if it overprints with the POW zone, then we've got something where, you can maybe develop a larger scale, lower grade with an added addition of having the high grade zone very close to it.
For people looking for more information, where can they go, and where are you traded?
Well, we're traded on TSX Venture, and you can go to AbenResources.com and get all the information. It's a good website. Lots of information there.
Jim, thanks a lot for the update.
You bet.
I've been speaking with Jim Pettit, CEO and President of Aben Resources. I'm Jim Goddard. Our conversation took place on January 15th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.